Hey guys, good afternoon, everybody. Today is Monday, September 26th. It is 2 p.m. right now. Our scheduled mentoring session for today is supposed to start at 2, so we will be starting shortly. Let me just go ahead and set up this room real quick, and then we can get started. So just give me a few moments to finish updating everything here, and then we can get started shortly. See, looks good. A couple more things here to update. Solid. So it looks like we're pretty much good to go. Let me get this link sent out to you guys here in the premium. All right, solid. Link sent out. Right here. And we should be good to go. So I'll give it a few minutes for people to make their way in. And as soon as people join, we can get started shortly. So, hey, Kenny, how's it going? All right. So I'll give it a few minutes for people to join, guys. Good afternoon. It is Monday, September 26th. It is 2:02 p.m. right now. Our scheduled group mentoring session is for 2 p.m. So it's been 2 minutes since 2, not too long after. Let's give it a few minutes for people to continue to trickle their way in. If you guys have any questions, feel free to put your questions in the chat. We have one question from Jamie regarding the K2SR rejection strategy. So we'll be going over that. But other than that, I don't have any questions. So, feel free to put whatever questions you guys have, and then we can continue along with the session for today. Hey, Jamie, good evening. All right, so since you're here already, Jamie, we can start off with the K2SR rejection strategy. If there's any other questions you guys have or anything that you guys want to continue on regarding the K2SR strategy, feel free to put your questions in the chat, and then we will continue on. So let's start off with the first entry here that I can find. So it looks like there was, not here. Looks like there may have been an entry. Nothing there. Let's play it far back here. See if we find the entries over here. Just looking for any possible buys here or sells, wherever we can find one. Nothing there. Nothing there. I do recall seeing some after we got off the live. So let me just rewind to this area here. It looks like market was pretty choppy right after, but we weren't trading during this time, so it wouldn't really matter because it didn't really affect us too much. Let me just go back a little further. I'm looking for an actual clean entry, not one that's like an iffy one. Let me go back to like 10 o'clock. I think the last time I saw was around 8. It was like right when we got off the live. There were a couple entries that came up over here. So let's go back a little further to this point right here. This candle here is too big. Candle's too big. Let's see. I did identify one over here. Let's replay a little further back. So I think there were a couple see, it was like one. Okay, perfect right here. So I'm just going to replay it at this point right here. So, all right, guys, the first question that we have right now is from Jamie. Jamie wants me to go over the K2 SR rejection strategy. So I'll go over it in detail right here just to show you guys how to take the trade. So here's an example of one that we would be taking for a sell. So if you guys were on the live session earlier today, you guys would already know that we had a sell bias overall. So we're only looking for sells here. Another reason we're looking for a sell here is because the trend on the short term is also bearish. So looking at the requirements here for a sell, the first thing that you want to do is identify a wick rejection off a K2SR zone with a moderate red candle, right? So we have a zone right over here. I'm going to go ahead and draw it there so that you guys can see a bit better. Obviously, if you guys didn't use the zones here, or I mean, if you guys didn't draw them in yourself, you can still see that there's a K2SR zone right here. But what I'm going to do at this point is I'm going to turn it off to clean up the chart so that you guys can see it a lot better. So for the first requirement here, you want to confirm and identify a top wick rejection off a K2SR zone with a moderate red candle. So right here, we have a K2SR zone. Turning this on right here, you guys can see that it is there. I just drew a zone right over it. So once you have that identified, you can see that we have a wick rejection right off the structure. And we have a moderate red candle right here. A moderate red candle just means that the body of the candle is bigger than the bottom wick. The bottom wick can't engulf the body of the candle. So as you can see right here, the wick on the bottom is very small. It's nowhere compared to the size of the candle, right? Once you've confirmed the first requirement, you want to confirm that you're trading in the direction of the trend using the K2 trend meter. So the trend meter down here is red. And for second confluence, you can use the K2 pivots. So as you can see, price is below the pivots are angling down, and you have the red pivot over the green pivot, which is pivot 4 over 3. So with that said, we have a downtrend, right? It's pretty obvious. Trend meter is red, price is below the pivots, they're angling down, and the red pivot's also over the green pivot. So with that said, we have this lined up here. That's gonna be requirements 1 and 2. Requirement 3, you just want to confirm you're trading in the direction of momentum. So with that said, you're gonna look back to the most recent momentum signal, which is a sell right here. There's no green in between. So the most recent momentum signal is going to be a sell, and you'll know that you're trading in the direction of momentum. Once you have this right here, you'll have a short position. You'll enter this for 100 pip TP, 300 pip stop loss. Once you have that set up right there, you let it run. And there you go, full TP. So if there's any other questions regarding this, Jamie, feel free to let me know. But this is an example of a sell. I'll see if I can find an example for you for a buy, just to show you the opposite. Question for Kenny. Kenny's asking, can you go over the candles when to take a trade and when not to? Sorry, let me reread that. I think I added a couple words there. So Kenny's asking, can you go over the candles when to take a trade, when not to? I think I filled in the words that you needed there, right, Kenny? Because I think you're trying to ask, can you go over the candles when to take a trade and when not to? Is that your question? So you basically you want me to show you some bad examples. That's basically what you're asking for, right? I just want to confirm because I think you missed a couple words in your, okay. So we'll do that after I finish going over a buy example for Jamie over here. So we went over a sell example right here. Next, I'm going to go over a buy example so that Jamie can see both sides of entries. Let me see if I could find one. I think this candle here is too big. We might have to go back a couple days because we didn't have any buy entries this morning. I'm going to replay a little further back, or actually, let me see if there's one here. Nothing here. Let me go back a little further. Nothing here. Let me see how big this candle is right here. It's too big of a candle. See this candle right here. Okay, so there's one right here. Let me show you a buy example right here, Jamie. So again, same requirements, but instead of looking for a sell, you're looking for a buy here. So here's the K2 SR rejection strategy. Kenny said, sorry, I'm not an educator. No, you're fine, Kenny. You just missed a couple words. You're probably typing a little too fast, which makes sense. I mean, it happens to me sometimes too. I sometimes type and don't even think, I type before I even think about it, and I end up missing a word. So no worries, Kenny, I got you. So here's an example for a buy, Jamie. Same requirements, it's just in the opposite direction. So for a buy here, you want to identify a bottom wick rejection instead of a top wick rejection off a K2SR zone with a moderate green candle. So with that said, I'm going to go and draw the zone right here. You guys can see there's a zone right here, right? I'm just going to draw up my own zone over it to clean up the chart a little bit. So I'm going to turn this off. And you can see for this green candle right here that it's rejecting off the K2SR, right? So with that said, we have requirement number 1 met right here. We have a wick rejection off the bottom that's pushing away from the K2SR zone, and we're looking for a moderate green candle. In order for it to be moderate, you just need to have the body bigger than the top wick. That's like the simplest way to identify a moderate candle. So with that said, we have requirement 1 met right here. Second requirement, you want to confirm that you're trading in the direction of the trend. So in order to do that, you're going to use the K2 trend meter. Down here, the trend meter is green. So with that said, we have a bullish trend. For the second requirement, you want to confirm that the K2 pivots 3s over 4. And that's also confirmed here. Prices above the pivots, they're angling upwards, and you have the green pivot over the red pivot. Green's going to be pivot 3. Pivot 4 is going to be the red pivot. So with that said, you have all requirements here met for 1 and 2. Third requirement, you want to confirm you're trading in the direction of momentum. So if you look back over here, you can see that the most recent momentum signal is a buy signal, right? There's no sell signals in between, so you are trading in the direction of momentum. With that said, you have everything met. Wick rejection off the structure, moderate green candle, upwards trend, momentum is bullish. You enter a long position right here. You set your TP stop loss to 100, 300. With that said, you let the trade run. Pulls back a little bit, some retracement there, and it swings right back up to full TP right there. So there goes an example of a buy entry, Jamie. So I just showed an example for a sell, example for a buy. If there's any other confusion or anything that you want me to cover more in detail, just feel free to let me know. Next question up is from Kenny. He wants me to go over basically bad trades that we would not take applying the K2SR rejection strategy. Yeah, no problem, Jamie. If there's anything else you need help with, just let me know, and then we'll try to go over it. Okay, so I'm going to try to find some bad trades here. It's going to be kind of hard for me to find because I need to figure out like what exactly is a bad trade for you, Kenny, right? Because the only bad trades are the ones that don't fit the requirements, right? So if the requirements don't meet, I mean, it could be any candle, right? I can show you this candle right here. And I can say, hey, Kenny, this is obviously not a good entry because the requirements don't meet, right? So if there's anything specific that you're confused with, because, this is so open-ended that I can literally point at any candle and say, Kenny, why isn't this an entry? It's because the requirements aren't met, right? So I can just pull up like any candle here. I can just go and rewind to this candle here. And I can tell you, Kenny, why wouldn't you take this trade? And then you can just point out the differences here. There's a sell momentum, so obviously we're not looking for buys here, right? So here's an example, and I'll be as plain as possible so that you can kind of, and hopefully you understand what I mean about the, it's like, any entry that doesn't fit the requirements are not going to meet. So let me show you one example here, because your question is it's just too open-ended. Like you have to kind of like dive into like, what are you confused with, right? Because it's kind of hard to screw it up unless like you don't follow the requirements. And that's the only reason that you would find a bad trade is if the requirements don't meet. So here are the requirements again for the SR rejection. And I'll just go over the requirements here and I'll show you exactly why you wouldn't take this trade. So obviously right here, identify wick rejection off K2SR zone with a moderate green candle. I guess this would be considered moderate to not moderate, right? Because a couple examples here doesn't fit the requirements, right? It's rejecting off the structure, but it's not necessarily a moderate candle because if you look at the body over here, the body is about 70 pips. The wick up here is about 70 pips, right? So it's not a moderate candle. So that's going to be one of the red flags there. Requirement 1 hasn't been met, so you're obviously not going to take this trade. If you were to see this and you identify this as a moderate candle, it still wouldn't meet the requirements because if you look at requirement 3, you want to confirm you're trading the direction momentum. Momentum here is for a sell, so you obviously wouldn't take the trade here. Yeah, Kenny said when to take the trade and when not to take the trade. So to make it as simple as possible, Kenny, you wouldn't take a trade if the requirements aren't met. You would take the trade if the requirements are met, right? It's like it's the difference between night and day. So it's really hard to like mix it up unless there's something that you're confused with. Like, are you confused with a moderate red candle or a moderate candle in general? Are you confused with identifying the trend? Because you can't really find a bad candle unless, or a bad entry unless the requirements are met. So do you have a specific example that you want me to cover, Kenny? Because I can show you, it's just, I can show you a million examples here, but it's none of them are going to fit what you're looking for, right? Because they're obviously not going to fit the requirements. Every entry that we see here is not going to fit the requirements, right? So if you want to look for a bad trade, you just look for a trade that doesn't fit the requirements, which is basically every candle except the ones that do meet the requirements, if that makes sense, Kenny. So if there's a trade that you were confused with, or you had a specific one that you weren't so sure about, I can go over it, but you got to like give me the timestamp, because I can show you like every single candle here, and I can show you, okay, you want to take this for a specific reason, right? And the thing with this too here is that you kind of have to struggle to understand it, right? Like I can't just tell you, okay, take this trade because all the requirements are met, because obviously I can tell that the requirements aren't met, but you don't necessarily understand that. So if you can tell me what's your biggest problem, is your problem identifying wick rejections? Is your problem identifying K2SR zones? Your problem identifying moderate candles, identifying the trend, identifying momentum? There's only so many steps here that you can screw up, right? So like one of these is going to be one of your issues. You get what I'm saying, Kenny? So do you have an issue with the rejections? Do you have an issue with identifying trend? Do you have an issue identifying momentum? Because we can drill down on that. If that's your main issue, I could show you a bunch of examples when to take it and when not to take it. But for me to show you when to take a trade and when not to take a trade, it's literally every candle that doesn't fit the requirements. Does that make sense, Kenny? So if you could be a little more specific, like even just a little more, just to identify, one specific requirement, I can show, okay, so you're having problems with the wick rejection. So let me see if I could find one over here. So this is an actual valid entry. Let's see. So is the problem with the wick rejection, Kenny, or is it the moderate candle? Because that requirement is basically two things in one. For that requirement, it's to identify a wick rejection off the K2SR zone with the moderate green candle. So do you have an issue with the wick rejection part or the moderate candle part? Because I can show you an example right here. Let me just replay it real quick. Okay, like right here. So there's an entry off this candle right here. But can you tell me what's wrong with it? So I think this would probably be a better way for you to understand, Kenny. I'll show you an entry here. You tell me what's wrong with it. Because if you can't tell me what's wrong, then I can figure out what your issue is. So do you see this candle right here, Kenny? I'll put the requirements in the chart. If you can just tell me what you think is wrong with it, I'll tell you if you're right or if I'll tell you if you're wrong. Because the thing is, if I give you the answer, you're not going to get it. It's just going to go in one ear, out the other, right? You're going to forget about it like a few seconds later. And then you're going to say that you know it, but you really don't. So just look at this candle right here, Kenny. Tell me what's wrong with it. If you can't, just tell me you can't, and then I'll explain to you why. Exactly. So you're right. So I don't think you have an issue with the moderate green candle or the moderate candle, right? The wick on top is too long. So you're spot on with that. The wick right here is about 50 pips. The body right here is less than that, right? So you're spot on. Let's look at another example here. We got another one right next to it right here, right? So what do you think is wrong with this candle right here, Kenny? Why would this not fit the requirements? And this is the best way for you to really understand stuff. It's like you kind of struggling to figure out what's the problem with it. And then if you make a mistake, I can correct you, and then you can understand, okay, this is what you have to look for. So for this one right here, it's very similar. I'm pretty sure you could identify that. I'm going to look around and see if I could find one. So do you see the issue with this one, Kenny? I'm pretty sure you do. I'll measure the wick up here. Exactly. Yeah, so you're spot on with that again too. The top is about 50 pips. The body of the candle is about the same, 50 pips, right? So you're spot on with that. Let me go over here now. And we have another example right here. So this right here, the wick's not the problem. You see what the issue is with this one, Kenny? So first requirement, identify bottom wick rejection off a K2SR zone, K2SR V2 zone with a moderate green candle. It looks like we have a moderate green candle there. What do you think the issue is with this one? So I'll just wait for Kenny to give a little response. And I think you should be good. So yeah, just take a look at this candle right here, Kenny. We're just looking at the first requirement. So you're identifying a bottom wick rejection off of K2SR zone. I'll zoom out a little bit so you can see the zones here. So you're looking for a bottom wick rejection with a moderate green candle, right? You see what the issue is there? So I got a few moments for you to think about it. No. So Kenny's response was the bottom wick was too small. For this one right here, the bottom wick doesn't matter, right? You're looking for any bottom wick rejection. So the size of the wick below doesn't matter at all. The thing that's not here is there's no rejection off a zone. The zone's way down here. So okay, I've kind of pinpointed what your problem is. You're having trouble identifying where the K2SR zones are, right? So your response to this right here was that the wick on the bottom was too small, but that doesn't matter. Bottom of the wick doesn't matter at all. The only thing that matters here is the top wick, right? Because that's going to confirm if it's a moderate green candle or not. So I could already identify here that your problem is that you can't really, or you don't understand how to identify the K2SR zones. The problem with this here is that you don't have the indicators, right? So that's why it's impossible for you to practice. Okay, I could kind of see what your problem is here. Here's the issue with this. Since you don't have the indicators, you can't see it on the chart. You have to look on my chart, right? So typically when I draw the zones on the chart, I draw them right over the K2SR zones. So it'll look like something like this. Same issue with Jamie. Jamie has issues identifying the zones. So what I would do for you, Jamie, because I know you do have the indicators, this is one thing that you can do to fix that. Kenny, you can do this eventually when you do get the indicators. But for now, I'm going to show you what I would recommend you guys to do if you guys have problems identifying these zones here, right? This is an exercise that you can do. It's not too difficult. You basically just turn off all the indicators except for the K2SR V2s, right? So what I would do here is zoom out of the chart so that you can see all of the zones here. Once you have the zones on the chart, you'll go and use the rectangle tool, which is what I typically use. And you'll use this magnet tool here so that you can identify it perfectly, right? So the easiest way to do it is to go from top to bottom or bottom to top, just that so that when you do that, you don't miss any of these zones here. So Jamie, this is what I would typically recommend you do. Just zoom out so you can see everything on the chart. Click the rectangle tool, go from the top right here, draw that one, next one right here. And you're just overlapping the zone. You're not doing any actual work here, right? You're just overlapping. You're outlining basically where the K2SR zones are so that it pretty much pinpoints what you're looking for. So we have one right here, go down to the next one, right there. Next one, right there. This one, right there. And you can use this to help you in the future, Kenny, because I know you're eventually going to get the indicators. Once you do, this will help you identify these zones. So I basically just go from top to bottom, draw all the zones right there. And once you have all these done, this pretty much clears up all your confusion. So if you have this right here, Kenny, this is where you can identify that there's no wick rejection off the structure, right? Because that's the main requirement. You're looking for a wick rejection off the K2SR V2 zone, right? There's no wick rejection. So for that, you skip over this one. That's the issue with this trade here. And then if you want to keep practicing, just zoom out. And if you have the rewind tool, just hit forward or hit the play button. And then as you guys can see, there's new zones that pop up, right? So this is how you can get better at identifying the zones. As you move forward, you see another zone come up here, Jamie. You just go ahead and go back to your rectangle tool, draw a new zone there. Hit the forward button. Keep watching until new zones pop up. Another one's popped up right there. Draw a new zone. Keep going forward. And you can see how easy it is, right? Once you practice this, and you can see where price is already rejecting from because you've drawn these zones. You already knew where the rejection was going to happen right there because the zone was already there. You could have identified a double top if you like to trade double tops or double bottoms. So as time moves along, what you can do is you'll use this tool right here that will take off your drawings, right? You click on that there, and you can see these zones here are no longer on the chart. So with nothing there, you just delete this one, delete this one, delete this one, and lastly delete this one. You can see there's a new zone there, so you just go ahead and draw another one right here, right? Easy. And then for these right here, so I know this is a little confusing for people. When you see these overlap, there's two ways to do it. You can either draw two zones. I mean, it's up to preference, right? I like my charts really clean, so I don't like drawing zones over each other, but you guys can draw two zones over each other. It doesn't matter. If it works for you, then do it that way. For me personally, what I typically do is I go back to the last zone back here, and I just stretch it out to this one right here, right? So it engulfs both of the zones. So instead of drawing multiple zones, you just have one big zone. So for example, right here, I'm going to go and hide this. There's nothing down here, right? I'm going to go and delete this. And you can see that there's a zone here that hasn't been filled in. Go and draw another one right there. So as you continue to move along, you'll see that another zone has come up right here. So you just go ahead and draw another zone there. And this is something that you can do over and over again. Jamie, like if you're bored on the weekends, or if you're bored at night, or if you're bored, if you have any free time, this is something that you can do every single day when you have free time. And then when you come down to actual trading, it's not going to be so difficult because you already know the process. You just turn on your indicator, draw over them. See there's no zones down here. Delete these. And I know it's going to be difficult at first, but as you continue to move along, this will be like second nature to you. Like for me, if you guys see me on the live, I don't even think about it. I'll just draw a zone like that. Keep going. Draw another zone right there. Keep going. Draw another zone right there. And this is the foundation, right? So you're going to be learning how to draw these zones. And once you really get it down, you'll start putting the pieces together. So like for me, I don't even have to like take this off, right? Because I can just see when the zones disappear. Because I've been doing this for like years now. Again, another zone right there. And this doesn't necessarily take years to do. You can pick this up right away. You can pick it up as quickly or as slow as it takes for you. There's no rush for you to really get this stuff down. It's just really going along with what it takes for you to really get this stuff down. So, you might not get this down tomorrow. You might not get this down by next week, but eventually if you keep trying, this is gonna be super easy for you. So as you can see, new zones just keep popping up everywhere. Another one up there. And these tools are going to be simple once you use them enough because you're using the same tools over and over again. The main tools I use is the rectangle tool and the magnet tool. That's literally all I use. Sometimes I use a price tool. If I'm showing you guys, if we're trying to measure like the candles and stuff, I'll use a price tool. If I'm taking a long position, I use a long tool. If I use a short position, but you'll see that most of the time I'm using the same exact tools. I don't use very many. Main one is circle. You don't have to use a circle. I just use this to show you guys where I'm looking. But for the most part, if you guys are adjusting your zones and whatnot, the only indicators I use are the rectangle tool and the magnet tool, so that it can be pretty spot on when I draw these zones here. So again, right here, new zone. Open that up, pop that up right there. This zone over here has disappeared. New zone's created right here. You guys can see I do that within a matter of seconds. So each candle here is about a minute. minutes enough time for you to change your zones up. You don't have to, it doesn't take you like an hour to draw zones because the indicator does everything for you. Right, this zone is pushed down a little lower. So if you're still confused with this, just let me know, Jamie. I know this is one of the issues you have, but I think this exercise here would help you get a lot better at identifying zones. And what you can do too is if you get really bored, I mean, just go back as far as you can. Like you don't have to go to today's chart. You can go back to like way over here, September 6th, right? I'll go back and just replay it over here. And it doesn't make a difference. It doesn't make a difference if you're looking at it on that day. It's the same exercise. Go from top to bottom. That. And there you go. So here's one thing, and this is why I wanted to pull back like that. The reason why these zones are kind of weird is because it was a weekend. So it went from September 2nd to September 4th. And you can see this zone right here doesn't have a zone, right? When it's in that situation, like you just wouldn't draw a zone at all. You just leave it alone and then let the new zones pop up. And you just stay on this time frame. You don't have to go on like any higher time frame, any lower time frame. You just stick on the same time frame and practice. So pretty simple. And again, right here, let's draw that out a little further. And it's, it's pretty simple. It's just all about practice, guys. It's like learning a new language, right? Like reading charts is like learning a new language that you're trying to understand. The more you practice, the better you'll get. If you don't practice enough, you can't expect to be a master at it. Yeah, Jamie said yes, thanks. I think I was making it a lot harder than it really is. And I will practice a lot. Yeah, no, definitely, Jamie. That's all you gotta do. It's all about practice, repetition. Like for me, I don't have to think about any of these entries, right? So if you ever ask me for an example, I can literally pull up the charts like this, and I can just identify an entry just by like eyeballing the chart. Like for example, right here, if I was to look for a buy for K2SR, actually there's no zone right there, or a sell right here. So if I wanted to show you an example for a sell, super simple, right? I don't even have to think about it because I already know what the requirements are and I know how to do everything. So, for a sell right here, trend is below, trend meter is red, pivots are angling down, red over green, wick rejection off structure right here, moderate red candle, sell signal right there, we're trading the direction of momentum, short position entry right there. Let that run, full TP. So it's that easy. If you guys practice it enough, I created this strategy, so it's like second nature to me. I don't even have to think about it. If you ask me for an example, I can pull it up like super quickly. All right, so let's see. Other than that, next question is from Jonathan. He's asking if I can go over the 4 trades that came up after the live. Yeah, definitely, Jonathan. I was really tempted to enter those trades, but I gotta stay disciplined. So you guys just got to remember, your main goal is to not lose trades, right? A lot of people try to make it seem like the goal here is to make as much profit as you can in one day. But the thing with that is that those same people that are telling you that, they're passing challenges within a day or 2 days, and then they're blowing their account the next day, right? They're not telling you that, right? They're showing you these huge profits one day, but then the account's blown the next day. It's all about consistency. What's the point of passing your challenge if you can't stay funded, right? And this isn't the case for everybody. It's the case for like certain people. I know certain people in the group. That's why I'm mentioning it, or not even in the group, just people in general. Like I see people post stuff on Instagram or social media and stuff, and they'll show off these big profits, but they never show any losses. Realistically, they are losing a lot. They're probably blowing their account every other day. It's all about consistency. If you can't be disciplined or consistent, there's no point, because you're gonna do good one day, and then you're gonna do horribly the next day. And it's just going to be back and forth. You're never going to actually make any profit. So, just keep that in mind, guys. And a lot of the times you guys should not worry about what other people are doing. Like me, I don't care what anybody's doing. If anyone's making more profit than me or less profit than me, so be it. I don't let it affect my trading at all. But anyways, let me pull up the trade. It's over here that Jonathan was referring to. So we got these right here that started at 820. So let me go back and replay this to 820 today. We'll go to like 840. It was around some time around there. Okay. So I'm going to go over here and see which ones did I identify. Okay, so I'm going to go ahead and draw the zones right here. Just going to clean this up a little bit. So there was actually a huge zone right here. It just pretty much engulfed everything. So what I'm going to do here is I'm going to go ahead and turn off the K2SR indicator to clean it up. I think the first entry happened right here on this candle. All right, so let me go over here real quick and replay it. And you guys can see that this strategy, typically the entries come in bunches. Sometimes it'll come with like 2 or 3 trades back to back, sometimes 4 trades, like this example here. So for example, here we're looking for a sell, right? The reason why we're looking for a sell is because the overall bias was a sell and the short-term bias was a sell as well. Trend meter down here is red, pivots are angling down, and the red pivots over the green pivot. So with that said, we have a very strong sell bias. First requirement, identify wick rejection off the K2SR zone with a moderate red candle. This wick rejection was off this structure, and this candle right here is a moderate red candle. Reason for that is because the body is bigger than the bottom wick, right? So it's a pretty moderate candle. It's not a strong candle, but it is moderate. So with that said, you enter a short position right here. All requirements are met. 100 pip TP, you let it run. Full TP right there, right? There goes the first entry. The second entry is right next to it. This one right here. Same thing again. Wick rejection off structure, moderate red candle, sell momentum, downwards trend. Second entry right here, right next to it. You let that trade run. Full TP again. So another full TP right there. And then we have another one right before it. Like literally there was 3 back to back, like literally after each candle, there was another entry. So again, right here, one more. Let's see. Can't paste. All right, short position right here. Same thing, wick rejection off the structure. You can see the structure is huge. So whatever wick rejection happened within here, it would fit the criteria. Wick rejection off structure, another moderate red candle right there. This would be the entry, you let it run. You're traced up a little bit. It didn't hit stop loss, but it got really close to hitting it. Came right back down. Full TP. So there goes another one. And there might have been another one right here, but I think this candle here would have been too big. So let me just measure it real quick. Yeah, it's a little too big because it's about 320 pips. If your stop loss is 300 pips, there could be a chance that it comes up, hits your stop loss, and then comes right back down. So nothing on this right here. Let's follow the next one here. I think this might have been one right here too. I don't know how big the bottom wick is. Bottom wick is about 100 pips. Body is about a little more than that. So again, another one right here. Wick rejection off structure, moderate red candle, downwards trend, sell momentum, let it run, and full TP again right there. There might have been another one right here again. Let me see how big this candle was. This candle looks too big. Yeah, it's way too big. So those are the 4 entries that I marked up right there, Jonathan. And you can see how they come in bunches, right? They come super quickly right after each other. So win, 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 win. I don't know if this one over here would have won too, but candle was too big. Looks like it would have won too. There would have been another one there, but I wouldn't have taken it because the candle was too big. For the obvious reasons right here, red flags would require that you sit this one out. Candle there is just too big. Even though it would have hit TP, it would have been considered a risky trade. Obvious red flags here. Near sessions, news price, opening price. I don't remember where the opening price was, but I don't think it was where price was around this area. So pretty solid. And I think that was it for this like little wave over here. I think there might have been another entry right here. Another one right there. I didn't identify this one, but I think there was another one right here. So again, right there, another full TP. So there was a lot of entries here. It was about like 5 or 6 entries. And then maybe this one too, if the candle's not too big. Let's see. The candle is too big. So wouldn't have entered that one there. All right. So I think that's it for those entries right there, Jonathan. Yeah, I mean, solid entries there. If anyone took those trades, I mean, these candles are too big, so you couldn't take any of these, but other than that, everything else here was pretty solid. There's another one right here. Actually, no sell signal, so nothing there. And I think that was about it. This candle here is obviously too big. Wick's too big on that one. No sell signal. And I think at this point, it was just too late to trade. I wouldn't have traded anymore at that point. Well, I wouldn't have traded at all because it's after 8. So let's see. Kenny's asking, can you go over candle sizes? So what do you mean by that, Kenny? Candle sizes. Are you candle sizes as in the candle being too large? Or I think, well, that's the only thing I can think of. Is that what you mean, Kenny? So you want me to go over candle sizes as in when the candle is too large? Or is it a different, okay. So, I mean, it's pretty self-explanatory too, Kenny. If you put a stop loss there, you can see if the candle's too large, right? Because the candle's too large if it's bigger than your stop loss. That's the main thing. And I think like you might be overcomplicating it because like it's the same with the wick rejection off the structure. I think you might have been overcomplicating it because you were looking for wick sizes, right? Wick sizes don't matter when you're looking for the rejection. Same with the entries here. So if you're looking for an entry, and here's a clear example right here. Or let me just go a little farther back. I think it was like this right here, right? All right, so the easiest way to do this, Kenny, is you just measure your entry, right? You look for your entry right there. You set your TP stop loss to 1030. If the candle is bigger than your stop loss, then it's too big, because when the candle is this big, it will likely retrace up before it comes down, right? And when it comes down, or when it retraces up, it'll retrace to either the half of the candle or the full candle, right? So what happens if price retraces to the full candle? It'll stop you out before it hits your TP. Does that make sense, Kenny? So I think you just might be overcomplicating it, which is completely fine. You know, people get confused with this all the time, but the easiest way to do this is to just set up your trade. Once you set up your trade, if the candle is bigger than your stop loss, then it's too big, right? So like, for example, this one right here, right? This one, let me just go back to this example. This one right here wouldn't be too big, right? It's fine because the stop loss is way up here. So if the candle does retrace to the full candle, it'll go into drawdown, but eventually it'll come right back down, which is what happened here. Price does retrace up here, but then what happens after? It comes right back down to full TP. Same with this right here. If you were to measure this candle right here, candle's obviously too big, right? Because the same problem here, price can retrace up to either the middle of the candle or the full candle. And this is what you want to avoid, because you don't want to end up getting stopped out before it drops down. The only reason we have a wide stop loss like this is because it's a cushion for when there is some sort of retracement or pullback. The only time the real big pullbacks happen is if the candle is too big. So I think this hopefully clears up your confusion there, Kenny. Main way to measure it is just to set up your trade with your TP stop loss. If it's too big, then you just skip over it or you wait for it to come back down. So here's another thing that you can do. So the same example that I just went over right here, this is what you can do, and this is what you sometimes see me do on the live session. So what happens is when the candles is actually it's not this one right here, or let me see if I can find another one here. I think there was another. I think it was this one, right? No, it wasn't that one. That one was actually okay. This one was okay. Okay, so here's no, actually, I just don't have the example here, but basically, what I would do for something like this, or let me see. I want to see one that actually retraces up so that I can show you like how I would make a late entry, because you guys do see me take those types of trades sometimes where the candle's too big and I'm like, okay, I really want to take this trade, but I want to actually wait for it to come down first. We don't really have an example here, but let me see if I can find one. Okay, so here's an example right here. Obviously, I wouldn't take this trade, but main reason is because the candle's too big. So you guys will see me take trades like this sometimes where I don't necessarily take it right away. What I do is I wait for the pullback to happen because I expect it to pull back, right, to the full candle. So what I'll wait for sometimes is I'll wait for it to pull back like that. And then if it comes back down, then this is where I set my sell stop to enter it late. So if it does come back down, it'll fill my order and hit my TP. If not, then I just never enter the trade because it's too far at this point. I'm like, okay, I'm just going to delete my pending order and I'm not going to take it. And a lot of you guys have seen me do that during the live. But yeah, I think other than that, I think that pretty much clears up your questions there. So if there's any other questions, guys, feel free to put them in the chat. I think that's about it for right now. I don't see anything else in the list. If I missed your question, just drop your question again. But I think for now, I don't see anything else here. I'll sit around and see if there's any other questions here. If there's any other confusion that you guys need help with, just pop into the chat, put your questions. I'm here to help you guys out. So whatever you guys need help with, if the issue is with staying consistent, your issue is over trading, revenge trading, it's the same thing with everybody. Like, don't feel like you're alone if you think that you're failing because you keep over trading. There's a ton of people who have the same issue. That's the reason why I have a time where I just trade and the time where I don't trade. I'll trade from 6:30 to 8, and that's it for me. Like, there was a bunch of entries that came up here at 8 o'clock, the ones that I marked up, but I didn't take any of these trades here, right? Literally 4 back-to-back trades came up and I didn't take any of them for the obvious reasons. So, all right, I'll sit around for a bit. If you guys have any questions, drop them in the chat. Otherwise, we'll be wrapping this up soon. But I'm here to help you guys out. So if you guys have questions, put your questions in the chat and we can cover whatever you guys need help with. Just looking at the market overall, guys, it's still kind of choppy. So let me go over here to the clean chart. And I just want to show you guys how the market moved today. Because I know some people are like wondering if the market is moving smoother, or in other words, better, versus how it's been moving in the summer. It hasn't really changed yet. You can't expect the change to happen overnight. It's going to happen eventually, but just looking at the charts from here. So 8 to 10, 10 to 11, 11 to market close. So this is basically where market opened. Market opened right here at 6:30, and you can see there's literally no direction. Price pretty much ranged for the whole period, pushed up, ranged some more, and then dropped down a little bit, and then continued to range. So the entire day today, there was like no direction at all. It was just a huge range back and forth. There was a small push, but realistically, no clear direction at all. Right, so price pretty much ranged here, pushed up a little bit, ranged over here, pushed down a little bit, and then ranged down here as well. Straight ranges all over here. Market did start to move a bit directional right here at 8. but then it ranged again for a while, right? Pretty much just ranged around this area. So there isn't really too much direction here. I mean, typically, if you guys look at the markets, during post-summer or pre-summer, generally what will happen here is this is typically what you would see. You would see market open, it would drop, retrace, maybe consolidate a little bit, but eventually continue right back down, right? And then once we get off the live, typically what will happen is it'll correct up a little bit, consolidate, and then either continue or reverse, right? It's the same pattern almost every day. This is when the volatility is high. The only problem is that we have other underlying news happening in the market. So this isn't a regular year because we're going into a recession. There's also, we're going to be voting for a new president as well. So there's a lot of stuff that's going on behind the scenes that is affecting the market. So it's not necessarily going back into its normal movement like it normally does in the fall, because we've had a lot of things happen recently. The only reason I know this is because I've been trading US 30 live for like the past 5 years. Everything is recorded. If you ever want to go back and see how the market was moving like last September, right? If you guys wanted to do that, you guys could literally go to the YouTube channel. Let's see if I can pull it up here. You could literally go back to the YouTube channel over here. It's wrong. You go to the YouTube channel, you go to the videos. I mean, it's going to take you a while to get back to like last year because I go live every day. So if you go far enough to like, see how far I can go back. 11 months ago, it's October. Okay, so I mean, this is fine. This is October of like last year, right? Date's this, October 5th. So we can go back to this date here and I can just fast forward it to, to the chart that day. See if I can go back over here. Let's go a little further. All right, so you guys can see already right here. This is how the market was moving on October 5th of last year. It was a straight push to the upside, 1,000 pips up, right? Like when the market's moving like that, you can take these daily entries because it's moving like 1,500 pips within like 10, 20 minutes. It's not like how it's been moving now. So you can see my profits here made like 11,000 that day because it was so easy. So I marked up right here 6:30 when the market opened, and you can see how it pushed right up, right? This is how the market's supposed to be moving. We're not at that point yet. So that's why we're still sticking with the SR rejection strategy, because right now the market's still choppy, it's still ranging, but typically you guys can see right here, literally the market went straight up for the entire session. So if you guys ever want to go back to see how the market was moving last year around this time, you can see I have a timestamp here, date stamp, October 5th, 2021, almost a complete month away. I mean, a complete year away, a year and a half. I mean, a year and a month, a year and a week. And you can see that this is how the market is supposed to be moving. Compare that to today, it's definitely not moving directional. It's going sideways. So if you guys ever want to do that, feel free. All of the recordings are on YouTube. They're completely free. You don't have to be paying for anything. I have so much data here from trading live with you guys for the past. I mean, I have like, it's crazy. I went over through these videos to like edit the titles, and I have over 1,000 live streams, like almost over 1,500 live streams. So I've been on over 1,000 live streams with you guys every single day for the past 3 to 5 years. So if you guys ever wonder how the market was moving in 2021, feel free to look back. If you want to see how the market was moving during COVID, you can just zoom as far back as you want. I haven't updated these videos yet because it's just too much work. I'm probably gonna leave it alone. But if you guys go back, you can literally go back as far as you need to. And you can see this stream happened a year ago. And I have so many videos here. When was this? Let's see. December 2020. Was that COVID? All right, so if you want to go back and see how the market was moving COVID time. So let's see, September 20, let's see, 29th right here. So if you want to see how the market was moving during COVID, you guys can pull these videos up and you can see I was still trading Forex around this time. Let's see, I gotta watch this stupid trading video. And I hate these ads that come up. It's always like BS ads. Anyways. Yeah, you guys can see right here, US 30. Let's go towards the end. Yeah, I was still analyzing Forex pairs back then. This is during COVID time. But yeah, you can see here from US 30, you can see how the market is moving. It was moving a little crazy during COVID period. But yeah, if you guys want to go back and check that out, feel free. Just want to show you guys that there's a lot of resources there if you guys ever want to go back and review stuff. Question from PC. PC is asking, how are the fills on with TFF compared to FTMO? I think you're doing challenge. Yeah, it's about the same. I mean, it doesn't really make a huge difference, PC. You know, I feel like a lot of people are too worried about that stuff. It doesn't matter. Like the fills are the same. The only thing is just the reliability of payouts. That's the main thing. I haven't had too many issues with TFF lately. I don't know if they're going to be changing servers again. It seems like a lot of these companies are changing servers like every couple months. So the fills are fine with TFF. My profits are about the same, if not better, or if not worse. Like they're probably off by maybe a couple seconds or so. They're not as bad as MFF though. So TFF is okay. Until I get a payout from them, you know, obviously, I'm not going to recommend them. The only company I'll recommend is FTMO. So, yeah, unless you guys have maxed out your FTMO, you know, don't bother looking for any other funding companies. MFF is okay, but I don't really recommend them. I've never recommended them like for people to use, but I'd probably hold off on them for now. I mean, they've been okay lately, but I don't know how long it's gonna last for. They keep changing their stuff up every couple months or so. So, all right, guys, I think that's about it with the questions. If you guys have any other questions, feel free to put them in the chat. You know, I'm here to help you guys out. I just don't have any questions to go over. I know there's not too much to cover because we're pretty much just applying one strategy right now, and it's not too difficult of a strategy. So there's not very much confusion there. But if there is anything that you guys are confused with, just, you know, drop your question and I can answer whatever you guys need me to cover. So other than that, I think that might be it, guys. So if you guys have any other questions, feel free to email me or message me on Telegram. Guys, if you guys have questions and you guys are scared to ask here on the live, just send them to me through Telegram. You know, Jamie asked her question for the K2SR strategy, like before we even went live. So if you guys are nervous or scared, or you guys just don't want to talk on during the live session, just send me a private message and I'll cover whatever you guys need help with. You know, my goal here is to help you guys out. I'm already consistent with trading. The thing is, when you guys have questions, it helps me become a better trader as well. Because the thing is, I would never go and overlook that. I wouldn't go and review the SR strategy on my own because I already know it. But since you guys ask me about the strategy every single day, it makes me better, right? I'm able to identify these trades super quickly. There's no difficulty for me to really point out what's good and what's bad. So unless you guys have any other questions, I think that'll be it. So if you guys have anything else, feel free to email me or message me on Telegram. If you guys have any other questions and you guys are just too nervous or too scared to ask, just email me. We'll do it privately. I won't say your name. You know, if there's anything that you guys need me to clarify, just, you know, pop the question in there. But other than that, I think that's about it. If you guys have anything else that you want me to cover, I guess we'll be back here tomorrow, same place, same time in the morning for the live session. But other than that, I'll see you guys then. So have a great rest of your day, guys, and I will see you guys on the live session.